Forward on markets is Sanjiv Bhasin also joining us now. Sanjiv, good morning. I remember 2 days back you did, take a call on the market that this war fears, all of that will be very temporary, and market indeed has come back roaring. What are the indicators which actually saw, which made you so confident of a pullback shortly?
Yeah, good morning, Ajay. Good morning to you and everyone who's watching. Watch ET now every morning and you will get over the fear bugs. The last 3 days were the opportunity, and the opportunity doesn't come knocking. It's not today, Ajay. I've been in the market 34 years and I've seen a lot of these events where geopolitical risk comes. The event is a sudden drawdown, which is a knee-jerk reaction. You take any of the big events from 9/11 till now, markets do capitalize, but then they come back very strongly. Only for the point that bond yields in the US will become a source of safety, and as yields fall, equities become very, very attractive. Now, I know it's not easy to buy when there is, unfortunately, people dying all over, but that is where the opportunity lies. Secondly, Ajay, foreigners have been net very underweight India and looking for deeper corrections. And if I read the, news today, CLSA says we cannot miss out on this opportunity of credit expansion, growth, and consumer spending along with capex. So they've turned overweight 20% more than MSCI weight, which makes my conviction even more that we are going to 20,000 faster than we thought in the month of October. Maybe not before the end, earlier than that in the second half, definitely.
Right. So Sanjiv, what's the best way to actually enjoy this move in the market? Any stocks that you'd like to recommend?
Yeah, so, morning, Aisha, yesterday I had told you Reliance. I continue to say be overweight. Reliance is one of the large caps which has underperformed but has enough legroom now on the upside. Like I said yesterday, you're valuing the retail business at about 9.5 lakh crore. Then the rest of the business cannot be at 6 lakh crore. So I think that Geo, OTC, new energy, if you just took some parts, I would say valuations lie closer to 18.5, 20 lakh crore. And I think that there is enough room of an upside for a 2650 target there. Today, I would recommend some of the fertilizer stocks which showed a lot of momentum. Now, this is also one of the calls which is that you have to try and play some of the momentum plays. I like very much Chambal and GNFC both. Secondly, if you read the papers, there is a 30% uplift in the, for farmers, which are relief which come, which will spurt these fertilizer stocks. So Chambal and GNFC both good for another 10%. Chambal anyway has also shipping as a business, which is doing extremely well. And at 280, considering the dividend yield, I think this can easily give you a shot at 310. GNFC itself is also a very good play on the fertilizer and the specialty chemical that they make. So 700 rupees on that is not a, is something which I would be comfortable. My last pick would be, this is a positional play on SRF. I think SRF is underrated as a company. It has enough things going. It is the 10th largest player, one of the top 10 players in BOPP, that is the plastic side of the filming. It is one of the largest players in nylon cord industry. This is aside from the specialty chemicals that they do. And in fluorochemicals, if you are going to see relief for the farmer and 30% more budget on fertilizer, then, Bayer Crop Science is one of the biggest players, and their sole selling supplier of fluorochemicals is SRF. So SRF is a positional play at this 2200 and 2230. I think 2700, 2750 can come in the next 2 months, maybe closer to Diwali, if I'm correct, and this, package plays out. So these are 3-4 very good ideas which can make you money. And at a time when you are looking for good stocks or ideas, then these should fit the bill perfectly.
Sanjeev, just wanted to scratch that point of the fertilizers, domestic kind of agrochem stocks a little more. Bloomberg has just put out a note saying that government may actually weigh raising annual farmer cash support via DBT by 30%. So 30% more money in the hand of the farmer. I think large part would actually be utilized for farm, upgradation or farm equipment or maybe fertilizers and all of that, because their sole livelihood is actually coming from the farm. They tend to spend there. Is that the trigger? What exactly are the triggers you're looking for that for the call on fertilizer stocks?
Correct. So, Ajay, it will have an effect on the whole pipeline. Like I said, Chambal, GNFC, you can see UPL getting re-rated. You can see rallies, which have not done much because of less demand in agrochemical. And once that spills through, you'll see consumer spending. You will buy more motorcycles. You will want to buy better cars, and the spill through effect. But the first play would be to ensure your crop and other things which will get better. You will get better margins and yields over there. And as you know, the sowing season is now, so people will look for this opportunity. I think it's a very big objective that the government is passing through again. You can say that elections are an overhang or a key, but I think hands in the hand of the farmer means rural incomes are going to be up. You can add that with a Bajaj Auto and play on that side, or you can see some of the TVS Motors of the world which are going to be beneficiating both from rural income and the added EV plays. And like I said, Chambal, GNFC, SRF fit the bill perfectly.
But Sanjeev, the story clearly seems to be in the real estate index, right? Fresh highs day in and day out, all the stocks holding up. You think there's money still to be made in any of the realty names? Would you have any picks there?
So Aisha, I stay very close to DLF Magnolia. I don't own Magnolia, but I'm very close to that, about 7 minutes from my house. And yesterday, I believe there was a deal for 100 crore on a 10,000 square feet apartment or a flat or a house. You can imagine that was about 60 crore about 8 months back. So the appreciation in price is telling me that DLF is hitting no new highs, not for any other reason, but the sole ownership of land banks and the value creation is huge. And gold and equity markets doing well. Fixed assets like real estate are hitting 15-year highs. As a disclosure, both DLF and Godrej are in our portfolios, and we are sitting pretty. And I can tell you, Gurgaon has seen the fastest appreciation in prices in the last 2 years than in the last 20. So it tells me that some of these plays are going to be even more bigger. And as the wealth effect plays out, then these two are musts in your portfolio. Add some now, wait for some decline, but definitely real estate is in a very sweet spot.
The way the momentum is intact within realty, is that dip going to come anytime soon for us to buy?
Well, I doubt so. I think it's better that you start nibbling at higher levels. Now, maybe the only tweak which you can do is to reduce the quantity. But the way many of these stocks have risen up higher, I think it's exceptionally strong. And it's again an indication that these stocks, even though they are high beta in nature, they are not buckling under the similar kind of a pressure. When we expect the indices to correct, we expect the high beta sectors and stocks to also go into a sharper correction, but that's not the case this time around for the real estate pack. Even if it's the likes of the mid cap end of the real estate pack, like maybe the likes of Sobha, Suntec Realty, etc., the formidable ones like DLF, Oberoi Realty, Godrej Properties, these stocks have not shown any major degree of volatility, especially in the last 6 to 8 months. That itself is a sign of behavioral change for these stocks. So would be very bullish on the space. DLF, Anantraj are two names which I've been consistently advising and would recommend to buy even at current levels.
Nuresh, I want to come to you about a small cap lender, which is, a lot of quarterly updates are coming in. Ugro Capital came out with a update yesterday, last evening, shows a 76% kind of a jump. But this stock almost went to 320 and came back. How are the charts looking?
So a lot of the smaller NBFCs have done well over the last 6 months. Ugro Capital was 150 rupees back in March, April. Made a breakout move into new 52-week highs. Has started drifting from 320 levels towards 270. Now the last breakout for the stock was 240 to 250 levels. So I would expect 240, 250 to hold, and closer to 260, 270 one could actually be looking at as a buy on retest of the breakout. So technically the structure is strong and the sector overall looks promising because we've seen the trends continue. But given the volatility in the sector, would keep a stop loss below 250 and look at it as a bounce back trade from here.
Okay, fair enough. Meantime, wanted to get in your take then, Sanjeev, as to what the outlook is within the entire capital goods space. Are you sticking to just some of the large caps like an L&T, or would the net be widened further?
Yeah, good morning. So, Avan, I think capex is in the best space ever. Imagine L&T announcing a buyback when the stock is at a 3-year high, which tells you the confidence the management has. And you know, for long, L&T has always been in high single digits. This time, the margins are looking to be maybe in the mid-teens, which is very, very sweet for L&T. So, L&T and Thermax are two big plays which we have. If you look for a decline in ABB, then that would be a must-have in a portfolio. But a quasi play on that would be Bharat Forge. As a disclosure, we've had Bharat Forge in the under coverage from that 650, 700, and now closer to 1100, hitting all-time highs. We think it's in a very sweet spot, given that it has exposure on forging industry, capex expansion, and the defense side. So it's a quasi play on the defense, but on the capex. But Bharat Forge is a must-have in a portfolio.
Sanjeev, and though you are a teetotaler, you do track some of the premium liquor stocks very closely. The news is now, Economic Times this morning has put out that India may finally sign the FTA, the Free Trade Agreement with UK by end of this month, which means in the next fortnight. Now, Diageo, which is listed in India, United Spirits, was seen as a possible beneficiary of that. You tracked that stock before. Do you like it at current levels? It's done pretty well in the last 6 months.
Yes, Ajay, that's the advantage of being a teetotaler. You are unbiased towards the tipple effect, and you are more balanced, even if the stocks are rising to new highs. So on a lighter note, yes, Diageo has been, or United Spirits has been in my personal portfolio as a disclosure since long. And I think the rising income, millennial spending, and the World Cup is all going to spur social drinking to a new high. The other stock would be Radico Khaitan, which has been a true outlier. And if you can spot, but stay with the market leader, I think Diageo is headed for newer highs.
Enough, looking at that entire space very closely. But in the meantime, I'm just curious, Sanjeev, to understand your take on how things have really transpired with something like a Z Entertainment. What's your outlook after the roller coaster ride that the company has really been on? Do you believe it's a good opportunity, or is it a complete avoid?
No, it's an excellent opportunity. Avan, you will have to, digest some of the news which goes on the NCLT and the court and the IDPI hearings. All that is priced in. You cannot have but Sony take a big stake of 57.5% and the company becoming relatively debt-free. I think the muck created by the Chandras has come to a head. And now you will actually see real value for entertainment. Look at Sun TV hitting new highs. Look at the viewership Disney is garnering. And with cricket and the World Cup and the exclusive rights Sony has, I think it's a very, very good play. So have a little bit more patience if you have. We actually spotted it at 185, and Ajay knows at that time when there was too much of uncertainty, that gave you the real opportunity. Now, I am not of the view that entertainment is a 6-day or a 6-week or a 6-month. This is a very, very long story, and the way the Z brand is and the establishment they have across the board on OTT, I think this stock can be a huge, outperformer in the next 2-3 years. So wait for this little bit of impasse to pass over, and you will be actually sitting on a huge wealth creator once Sony gets the clear title.
In fact, I do very clearly remember, Sanjeev, 185, 187 is when your brave call on Z was for a delivery-based kind of a play. But so that was a valuation mismatch, and you were pretty convinced that this matter will move in the favor and the merger will go forward. But what has also happened in the last 1 week or so is that the print and the digital, the DB Corps, the Jagran Prakashan, the ENIL radio saw a very big ad rate hike yesterday, have also come back. Very under-owned kind of a space. DB Corp has done well, Jagran, etc. Do you track that space? Because there's a election ad spend angle to it as well.
So the market caps are fairly low, and we are getting into bigger ideas right now. and Z has a fairly large. But I'll give you a small brief. Z has a market cap of closer to 20,000 crore at this. Market cap of Walt Disney is $2 billion. So I mean, entertainment in India is available for a song. And look at the viewership, look at the increase, and the growth in everyone's budget to media is unavoidable. You will do anything, whether you're sad or happy, you have to watch media. So I think Z is a no-brainer. Only thing which is overhanging is this constant to and fro of few cases. They've settled most of them, and I think that this is going to do extremely well. You can add a Sun TV, the type of breadth and the length they have broken. It still trades at a very reasonable multiple, I think. And in the South, we think that their market share being humongous, they can head higher on the OTT platform. On the print media, I have not tracked some of them because the market caps are fairly low. But that's telling you that ad revenues are going to be, or ad revenue incomes are going to be very strong, because you're at the cusp of the festive season, the World Cup. All that means that players like Z and Sun will be laughing their way to the bank, I think.
All right. Thanks very much, Sanjiv. Good to have you on board on that positive note and share with us your stock ideas.